Hello and welcome everyone to the Closing Bell Show, where you can invest with the best. This is the home for busy people to learn with other successful investors, navigate the macroeconomic climate with confidence, and receive undervalued stock opportunities without having to spend hours researching. If you're enjoying our content, be sure to check out our full content library at gems.closingbell.co.
Brad, I wasn't going to go in and do a big introduction on you. I thought maybe you could do that for us. But you are the writer and founder at Stock Market Nerd. I love your publication. I think it's incredibly in-depth and it's very refreshing. Lots of great writers out there, but I think you definitely stand out, and it's why you have, 60,000 loyal followers on Twitter, and, people are raving about your stuff. But I thought maybe you could give us the ABCs of Brad, and then we can jump into kind of like PayPal, because you did this deep dive on PayPal recently. I read through it, incredibly long and detailed read. So it took me some time, but I got there in the end. So let's jump into some ABCs, and then Nathan will ask you some questions, and then we'll do some PayPal.
Sure. Yeah. So I'm 25 years old, just wrapped up grad school. So very, very excited about that. I sort of got started in the world of mutual funds. I worked for a fund for about a year. It was very mundane tasks, like listen to this 2-hour-long conference and tell me what I need, tell my boss what he needed to know about it, or things like that. So that kind of morphed into writing for the Motley Fool for about a year, right about when the pandemic started. And from there, I learned from a lot of great people. Brian Feroldi, learned a ton from him. I'm sure you guys have heard of him from Twitter, but just learn. Honestly, the goal has always been to do my own thing, to have my own baby, my own project. And that's kind of how I view Stock Market Nerd. And really, it's a fixation, and hopefully I do a good job with this, but it's the intention to do a good job with this on objectivity. Now I own these companies, so I'm a little bit biased, and I can't avoid that, but I do try to fight that the best I can and avoid kind of the cheerleading or the cherry picking of good news or bad news, and just try to be really real with people, and don't. And I think maybe they're one of the reasons I've grown, and I'm grateful for the growth, and readers, if you're listening to this, I love every one of you. But I mean, I'm very real. I'll be very candid and blunt if something goes poorly, and I'll be very candid and blunt and loud if things go well. So I think people have gravitated to that, and just a focus on giving them all the facts and all the information with a little bit of opinion, but ultimately giving them the jurisdiction to make their own decision. I think is something that people have gravitated towards, and hopefully gravitate towards.
Fantastic. Awesome, man. So as Luke alluded to, we kind of do things a little bit differently at the start. We want to just ease you in with some fun topical questions. First and foremost, one that's become a staple here on the show is the friend, marry, kill question. I'm judging by that reaction, you've had one of them before. Some of the guests have never heard it, so it's a bit awkward, but we'll dive into it. Friend, marry, kill Dan Schulman, the current CEO of PayPal, David Sachs, member of the PayPal Mafia and ex-CEO at Yammer, or Peter Thiel, PayPal Mafia, also a Palantir founder.
Well, Peter Thiel I have to marry because he's got the most money, obviously. So that's really the only answer there. David Sachs, be a pretty cool friend. I like his podcast, the BFFs podcast. That's a good one with Jason and all those guys. But Dan Schulman, I don't want to kill you, but the rules are the rules of the game, and I only option left, so I guess I have to go into Schulman with that one. I still believe in you, Dan. I still think you could do a great job at PayPal, but yeah, I guess those are my answers.
Great stuff.
It's become a theme, hasn't it, Nathan, where people are going straight for money, and no one's really looking at the heart or the person anymore. So I think that's really reflective of I think society at large. But yeah, you tell me to that.
What was the first investment you ever made, and what interested you about it?
Sure. So the first investment that I personally ever made was with the help of my dad and my grandmother. I've had awesome mentors growing up, and truly grateful, and it's been very, very important to everything that I've done. But it was 10 shares of Disney. And I'm 25, so they bought it in 1997, and think it was like 50 or $100 at a time, and it was worth a lot more than 50 or $100 when it was kind of given to me. So that was the first investment, and I guess just the lesson there is buy shares of stock for your infants, because they'll be very grateful when they're older, which I am. So first, I guess investment that I kind of made on my own. I guess the first investment, I guess, process that is more so because I actually don't remember the first company, but I was very into the options trading and the fast money and all this stuff. And I was an 18-year-old kid in undergraduate with very little money at the time, which was an amazing thing that I had very little money, because I would have pissed it all away. I remember just gravitating to CNBC at like 12:40 p.m. or something, and the Nigerian brother would say, "Here's the unusual options activity," and I knew nothing at the time, and I liked gambling on sports, and that seemed like a pretty good kind of segue to doing that. So intuitively, I just started listening to everything they said. Lost the very little money that I had at the time, and really, again, back to my dad, and just being a great mentor, kind of heart to heart with. I mean, to be blunt, I was being an idiot, and he let me know I was being an idiot. And at that time, I was and if the language is too much, please tell me and I'll tone it down. But if the at the time, it was pretty clear to me that I wanted to be involved in the world of stocks, and I wanted to invest, and I wanted to be an analyst in equity research and all those things. So just kind of morphing that into something a lot more sustainable and a lot more responsible and a lot less degenerative, like I guess was kind of where that came from. So that was a little bit of a tangent, but hopefully that qualified as some sort of an answer.
No, that's wonderful. Fantastic. And I love the very early on. I think that's good advice. I was fortunate enough as well. My parents invested in some stocks for me, and yeah, I was very, very grateful. Now, final one, name one person you really admire in the investing world and why.
Ooh. One person that I really admire in the investing world and why. I'm not going to go with Warren Buffett, because I think that's just way too easy of an answer. I think I'm gonna give a writer a shout out and go with Mostly Borrowed Ideas, who has a wonderful newsletter. Who really, I mean, I try to dig up every detail and go under every rock and find every relevant piece of information that's possible. And it's really because before I started, I witnessed people like him doing it, and him having deep dives and everyone says they're writing about a company's a deep dive, but some of those are just, the stock's down 20% this year, and here's the PE and that, and public. But he actually really kind of showed me what that means, and how it shouldn't be taken super lightly. And he actually convinced me to sell my shares of Boeing a while ago, which I was grateful for. I was just extremely enamored by this whole global duopoly, supply constrained world that they lived in, and just ignored how not me, but negligent management had become. And I think I'd grown complacent, and he kind of pushed me to become less complacent. So Mostly Borrowed Ideas is a great writer, and I really admire him.
Now, in all your research on PayPal, Brad, how familiar are you with the PayPal founding story? Because I do know a little bit of the founding story. I do know that Peter Thiel and Elon connected. I think it was Confinity and X.com, and they kind of came together. But could you add some color to that story? Maybe take us from the beginning, if you can recall it. Because I would be keen, and I think the listeners would be keen to sort of set the scene on how PayPal came to be.
For sure. And as I talk through this, I would encourage your listeners to Google PayPal Mafia, because there's an awesome picture that comes up that is just, I think it's funny and it's cool, and it just encompasses what a dynamite team, superstar team this was at the beginning, and still is now, but maybe more so at the beginning. It was kind of like a cybersecurity company around 1998, 1999. Max Levchin, the founder and CEO of a firm, was one of the very first guys, along with Peter Thiel and a few others. And they tried really. I mean, I think they were before their time, and if they tried something 5 years later, it probably would have worked, and we never would have seen PayPal. But they tried to kind of build fraud protection and some of the foundational pieces that PayPal has in its own fraud stack into kind of a more digitized way of doing things in 1998 or 1999. And so it was pretty preliminary, and they had no success. So they pivoted very quickly to a payments, to kind of a more of a payments focus. And PayPal was one of the products that kind of culminated from that. And PayPal at the time merged with X.com, If you're a fan of Elon Musk, you know that's one of Elon Musk's early companies, and Elon really was instrumental in kind of pushing the company to really embrace PayPal and become PayPal and embody PayPal, and that checkout flow be the core of the product that we know today, that they really built over 20 years. And I mean, after that, they were so eBay partnered with them, and they were killing it with eBay, just absolutely dominating market share. And it became very clear that it was the preferred choice of checkout for pretty much everybody at eBay, or shopping at eBay at the time. And at the time this was happening, eBay was very much so in vogue and a lot hotter than it is now. So eBay purchased them, and kind of that remained for several years. And around 2015, Carl Icahn was actually an activist investor, and he forced this to happen, which just another iconic person who's been involved with this company over the years. But Icahn, sorry, that was unintentional. But Icahn kind of forced eBay, because it became clear that PayPal was outperforming the parent company, to spin PayPal off. And Dan Schulman became the CEO of the company in 2015. And for 5 years beyond that, it operated as sort of this standalone company. But there was a very tight operating agreement in place that kept PayPal as the primary processor and the end-to-end payments company or payment services company for eBay. So nothing really changed, but that agreement ended in 2020, which PayPal has been able to work with a lot more marketplaces since then, which has been a nice positive, like Amazon and Walmart and Flutter and all these other places. But eBay was a large chunk of the revenue at the time. It was a very high margin, comparatively, chunk of the revenue as well. So over the last 18 months, we've just seen we've every single data point with that PayPal offers is qualified with X eBay, because it's just been such a drastic headwind, both in terms of the revenue and in terms of the profit. Just for context, the take rate fell from 4% to 2.5%, and now it's pushing down to 2% with PayPal, because they've now gone out and are working with Adyen for their processing services, because there wasn't a special sweetheart deal, and they could get a lot lower take rate out of them than they were getting from PayPal. So that is where we are today, and we just got through the very last quarter of this ex eBay headwind weighing on PayPal. So now the handcuffs are completely off. Now the growth year-over-year comps have normalized, and it's really and I said this in the last earnings review. The ball is very much so in the court of Dan Schulman, to execute now that, yes, the world is a little bit scary for e-commerce right now, and for digital payments. And there's many headwinds that they're going to continue to deal with. Consumer confidence is low, although that's looking better. Inflation is high, although that's looking better. But there's no more unique headwind to blame. There's no more macro stinks, and PayPal is shaving 10% off of, or 1,000 basis points, not 10%. Well, 10%, but 1,000 basis points off our top line growth. So that's gone. So now there's no excuse for relative underperformance. And it's an exciting time for me, because we finally get to stop hearing these valid excuses, and to hear if this company is what I think it is, or if I'm wrong, and we'll say I'm wrong and move on, like I have done in the past, and I'm sure we'll do again.
That's a perfect segue into our next question. And most of that was a broader contextualization of your closing statements in your paper. Namely that, you're confident the rest of 2022 will be far kinder to this company than the last couple of years. So I thought you could just maybe break down the top 2 or 3 highlights from PayPal's most recent earnings review, just to set the scene before we then go into the deeper stock analysis.
Yeah, absolutely. So I think there were 2 real highlights that I would kind of take from the PayPal earnings review. One of which was Honey, which is several billion-dollar acquisition they made in deal discovery a few years ago. And the integration of Honey into the digital wallet is just, it's 7xing their deal discoverability versus the old app upgrade. It's significantly raising ARPU, or they call it our active revenue per account, not active revenue per user. So ARPA, I guess. And it's significantly lowering churn. So this ability to kind of move up from checkout to deal discovery, and now all the way to the entrance of a site page, really what it does is it it all works to augment PayPal checkout. Like that is the bread and butter of the company. That is what they're trying to support. But as you move higher and higher up, as that PayPal button or as that Honey button moves further and further up, they get a larger portion of that checkout share, which just, the benefits occur to them in terms of pretty much well, not I shouldn't say, because there are some variable costs, obviously, in terms of transaction margin, but they get a lot of operating leverage out of their fixed cost base if they can just use checkout share, which is what they're trying to do. And the real project that they're working on, which has been very successful, and sorry if the sun is like shining on my face in a weird way. It's 7:30,
Yeah.
so sunset. Or hopefully not sunset. Hopefully I have a few more hours. But anyway, so buy now, pay later. And this has become a bad word in public markets lately, when in terms of worsening macro, and I think that's it's a good thing. And the way PayPal approaches BNPL is why I like it so much. They don't charge merchants anything for it. They assume all of the balance sheet risk on themselves. And so essentially merchants get this free placement or free opt-in that PayPal can provide, and they just charge their standard take rate. So why that's so important is, again, moving up further in the checkout process. So BNPL is a fine product, and they're having a lot of growth there. And it's been a very successful organic product launch, which is important for them because it shows that they just don't need to buy everything that they want to be involved in. They can kind of internally develop, which is very important. But again, what it does, it's the same theme of moving further up the checkout flow. So they have what's called upstream presentment with BNPL, which essentially it's a fancy way of saying, instead of you seeing the offer on the checkout page, you're now seeing the offer as soon as you click on a product that you want. And what that does is it raises their share of checkout by 10%. And that's all PayPal needs. They don't need to charge merchants for anything like some of these other players do. They don't need to charge late fees to consumers or hefty interest rates like some of these other players do. All they need is the heftier checkout share and then the added total payment volume that coincides with it to profit off of. And to me, I mean, when we were printing free money for everybody and rates real rates were negative, these companies like Fast and Bolt and other players in the checkout space, that they could fund placement at terrible unit economics, at terrible margins, and they could literally buy market share because it was growth at all costs, and that's what their VC firms wanted them to see. But now that things have turned significantly worse, and that we are, or that the Federal Reserve over here is eroding their balance sheet and rapidly raising rates, and things have gotten a lot more precarious, that is no longer acceptable. So these companies have really fallen by the wayside, and now we're just left with these stronger players. And PayPal is not going to be the only one, but I certainly think it's going to be one of them. That's left with this extremely interesting value proposition for merchants, where they get more payment volume passing through their own sites, which that benefit accrues to PayPal, and they're not paying anything else for it, and they don't have to do anything else for it. It's so little onboarding work for them. They really just have to flip a switch, and it's not a light switch. And I'm not a computer guy, so I'm sure there's some buttons that have to be pressed and some typing that has to be done, but the onboarding process it's minutes for this project, and there's no added cost. So those two things are going very well and growing rapidly for the company. And those were two highlights that I was very encouraged by from the call.
Fantastic. Sorry, guys. Apologies. My dishwasher's going in the background. So if there's any background noise, hopefully it stops soon. Moving on to a more specific question. CEO Dan Schulman said, quotations, 3 years ago, if we wanted a new product, we would have to buy something for billions. Now we feel we can do it more organically. Could you talk to me about some of the key changes Schulman's made to how PayPal operates, and whether you think he's been a net value add for PayPal since his arrival?
Yeah, and I do think he's been a net value add. That opinion has rightfully gotten more polarizing and a little more fragile in recent quarters. But in terms of like the makeover and the transition that he's really tried to make, and this is the effect of this is they used to guide to about a midpoint of $2 billion in M&A every single year, and they've removed that because they no longer think they have to. But it's really been about two things. So rapidly accelerating their software release cadence. So they had some split testing, and there were some product releases happening with the company, but it was a few dozen every single year, and it took them half of a decade to release this new version of the digital wallet. Just to give you an idea of really how archaic some of the infrastructure had been at PayPal. And just for context, I mean, JFrog is another company I own that powers continuous software releases, and they're pretty much in the entire Fortune 500 and all of these companies have continuous software releases just running and updating all day long, every day. So if PayPal did not have that, they have the same kind of dinosaurish app, and management owns this. They know how dated it was, and how, yeah, I think dated. I'll leave it there and won't use any words for it. But they knew how dated it was, and they knew that they not only needed to release this new app and this new digital wall with all of these new products and new features, but they also needed to release that with a new infrastructure and an updated infrastructure that allowed it to just automatically and continuously tweak things based on things like split testing different variables to see what works better, just in a much more fluid way. So they could accelerate a few dozen software releases a year to now 10, 20,000, which it sounds like a lot, but that's really just bringing them in line with the rest of the Fortune 500 I mean, a dozen per year was just absolutely ridiculous. And the fact that lasted into 2016, 2017, 2018, I mean, they were late to the game. And selfishly, that lateness to the game, I think, has kind of opened the door for me to become a shareholder in the last few quarters, because I think still with 400 million consumer accounts on the platform, with Venmo, which is absolutely killing it for them, there's a lot to like here. And I think they made the investments that they needed to make to kind of get over the hump of being this dinosaur company that some people rightfully have the image of them being, to being more seen as something like a Block or a Square, but with great margins and great cash flows, which we love as investors. So then the other thing they really spent heavily on, to kind of position themselves to be a global powerhouse in this field, is regulatory prowess. So whenever you're touching people's money, whenever you're handling finances, whether it's the ECB or the Federal Reserve or CSSF in Luxembourg, there are so many regulatory bodies that you have to deal with, so many strict laws, and they're all different in every single country that you operate in. So if you want to create a BNPL product or buy now, pay later product in the United States and have that in 10 countries or 50 countries that PayPal's in a year, that's not possible unless you have the relationships in place, unless you have the licensing in place. And for PayPal specifically, their risk team was about 50 people. And Schulman is 100x that since he took over. And it's manifested in things like PayPal becoming the only foreign company in China with a payments license, just evidence or them becoming an official payment option for the Italian government. I mean, it's things like this that create real value for PayPal, the company, and it's only possible if they're great at working with regulatory bodies. I mean, just the opposite end of the spectrum, I think, and it's another holding of mine. So I don't want to say too many mean things about the company, but Meta platforms and Zuckerberg has turned off a lot of regulators, and now Facebook is banned in China, and now there are certain countries that they cannot operate in because and now they can't buy Giphy for $500 million while Microsoft is allowed to buy Activision Blizzard for $50 billion. So I mean, you have to play nice. You cannot be a jerk in this field. You cannot be a bully in this field. You have to be a real team player and work together with regulators and partners like Apple and Google, so that you can succeed in a sustainable way. And PayPal is really focused on that, along with that software release cadence, which with other things such as them getting one of the first crypto licenses to transact with not buy, sell, hold, but to transact with cryptocurrency. Sorry, I'm battling the sun a little bit. But that when they're actually able to allow their consumer accounts to use their crypto balances in their wallets and go buy a pizza or go buy a painting or go buy a DVD, or no one buys DVDs anymore, but you get what I'm talking about. And for merchants, it's another just one of these value add products for merchants, because they don't have to accept Bitcoin or Ethereum or anything like that. All they have to do is allow this to be an option, and PayPal converts it to fiat automatically for them and pays them in fiat, while collecting a nice spread, which is very margin accretive for them, which I love. But it's just things like that are only possible if regulators get along with them very well. And Schulman has been very focused there, which I think has been a real value add.
I'll change tack slightly. I had a question on crypto related activities, but before I get into that, we mentioned, and we're talking a lot about M&A, we're talking about Venmo. You can just talk to like one or two of their key acquisitions. Venmo is obviously one of them, but I'm actually not too familiar with the M&A history. I know that they've done a really good job historically. But yeah, I would love to know maybe what those top 2 or 3 transactions may have been, and maybe it's like 2 successes, 1 failure, or 3 successes, whatever it may be. And then we'll jump into a bit.
Sure. Yeah. I'll start with a failure. So, it's been a pretty successful M&A track record or history for them, but I mean, not without bumps. And the real bump has been TO Networks, which they purchased in 2017, and that about a few months into that journey, into that combination, it became clear that TO was sharing sensitive data with people that they were not supposed to be sharing sensitive data with. This was to kind of accelerate PayPal's entrance into bill pay. That's what they were doing with this, and that's what their users were using it for. And so bill pay is very sensitive information, and they were leaking that to people that they were not supposed to. So PayPal actually had to shut that entire operation down just several months into the acquisition, and pretty much got nothing out of it. But that's the sore spot. So there's been a lot of bright spots that kind of to outweigh that in my view. And the big one was Braintree in I think it was 2012, but Braintree actually owned Venmo. So PayPal got Braintree and Venmo from that acquisition. And in terms of Braintree, what this did is it gave them a foothold into unbranded processing. So it's very well, now it's very similar because Braintree honestly had a much more sophisticated tech stack than PayPal did, and PayPal pretty much borrowed the entire thing for their own branded checkout. But Braintree kind of runs in parallel to PayPal in terms of very similar value prop, but no brand. So for small businesses, most of them want that PayPal brand because it builds consumer trust, because it builds confidence and raises conversion. But for companies like Airbnb or DoorDash or Live Nation or Grubhub or all these gigantic brands that don't need PayPal to create more awareness, they want full control of their brand, and that's really what Braintree provides with all the same data sharing and marketing tools and fraud detection tools that make PayPal so popular. So that's more than 10% of their total payment volume at this point in time. And a lot of people don't love the business because unbranded processing is very low margin. But it's also, what it also does is it generally gives, so when Airbnb and all these companies are offering checkout options and offering branded checkout options in addition to Braintree, which a lot of them actually do, they just want their payment flow to be unbranded, and then they're fine inviting other buttons in at the very end. But when Braintree is one of these options for an Airbnb, when we finally get to this button phase, it generally gives PayPal and Venmo more preferential treatment in terms of placement, which allows them to collect not only that unbranded processing fee, but then that branded checkout fee, which is higher margin. So I'm obviously a big fan of Braintree, and that's really why. But it is really because that transformation that we were talking about in terms of rapidly enhancing software cadences or software release cadences, in terms of tearing down data silos and allowing product teams to work in a more cohesive manner together, that relied on Braintree and the infrastructure that it really brought to the table that PayPal was lacking and that it needed to acquire. And so just it got a lot from that transaction. But the other thing that it got was Venmo. And I mean, I can't remember the exact price tag on this Braintree transaction, but the ROI has been pretty incredible. Venmo is at 85 million users. They are on the exact same super app path that PayPal is on, just several months behind. I would say a year or two behind. Like they don't have several of the products PayPal has at this point in time, but they will eventually. But really, Venmo allowed PayPal to get much younger and much more relevant in well, it's only in the United States now. So in American culture, that so kind of my age cohort is really the target demographic for Venmo, and really where the vast majority of its user base resides. And PayPal, conversely, really their bread and butter is baby boomers. So PayPal needed to get younger, needed to get more relevant to kind of lengthen their runway of growth. And Venmo really provided that. And the other thing that's just really exciting about Venmo, and this is a bit of a tangent, so I'll stop after this, but Venmo, so their tenets are community and social, and that's really what they're trying to what they're trying to embody. So sending money in a very friendly, community oriented way with your friends, with a social feed where you can see what everyone is shopping for and where everyone just spent their money. But if you think about this intuitively, that's that's a really interesting marketing placement for a lot of companies. So what Venmo is doing now is they've introduced business profiles where essentially you can link to a business on Venmo and say, well, yeah, I just spent $10 at this bakery, and well, I want to see what the bakery is so that I can go buy some goods or whatever from them. And really, if you think about it, take my word for it, marketing. So maybe Steph Curry saying, yeah, Subway's really good, and I really like their sandwiches. Like, okay, that's great. But when we're on Venmo, and I see my friends all shopping at this restaurant and using their own money, their own personal endorsement, that is a very powerful marketing tool for businesses. And not only does Venmo allow them to tap into the speed, but it also makes it really easy for them to kind of become portable businesses and become omni-channel businesses by literally printing them off QR code stickers that they can just paste on the back of their phones to turn into a payment terminal. So very low cost, very low friction, very easy for these companies. And PayPal is doing a lot more in terms of point of sale with Zettle. But that's another tangent that I won't go into right now. But they just the point is they got so much from Braintree, both in terms of supporting businesses, but also in terms of giving them this massive peer-to-peer network that is very low margin, but is also just an unparalleled source of organic word of mouth growth that PayPal's really taken advantage of. And now that they've gotten to 85 million users, it's time to turn on the monetization engine. PayPal just broke operating profit even, or not PayPal, Venmo on its own just turned operating profit even very recently, and is supposed to contribute very meaningfully to the bottom line this year. And operating leverage is supposed to be very consistent going forward. So it seems like they turned a corner in terms of being ready to monetize, which has been a very slow and frustrating process. But we're finally getting there. So excited.
Awesome. Quick question on Braintree. Is Stripe a direct competitor to Braintree?
Stripe and Adyen, I would say, are the two scariest competitors to Braintree. Absolutely, yeah. Sure. Yeah, definitely a scary, formidable competitor.
Yep.
Good point.
Yeah, awesome. On crypto, so I'm just going to quote you. Last spring, Venmo leaned on PayPal's Paxos partnership to launch its own buy, sell, hold crypto product. With crypto-funded checkout introduced a few months ago, within months, 30% of Venmo users, so 25 odd million people, were already using the new perk, which raised Venmo CLV from $10 to $35. They've also made a few investments in crypto companies such as Curve, TaxBit, TRM Labs, and Cambridge Blockchain. Can you talk about how important it is, or how important crypto is to PayPal's business moving forward? And can you talk about how their crypto offerings may benefit the whole sort of business ecosystem?
Yeah, and it's a great question. So most of the M&A they've made to date, or most of the M&A they've done to date in the space of crypto, has really been just to acquire teams of talented people and engineers to kind of jumpstart the hiring process in a very unique way. But crypto right now for PayPal, how they're operating it is very much so a bridge to central bank digital currencies or CBDCs that are very quickly becoming a very relevant part of the conversation in terms of a fiat currency being actually digitized by a central bank. So PayPal doesn't, and Schulman talks about this all the time. Their least favorite part of crypto is the price speculation and the fact that they trade as volatile assets. And really where they see crypto going is, digital wallets and digital currencies, they're like peanut butter and jelly. They go so closely together, hand in hand. And if PayPal can use these government relationships that it has and that it's aggressively working on in terms of CBDCs at this point in time, if they can use it to become a prominent digital wallet for these governments, like they've been able to do for Bill Pay in Italy and for a few other agencies in Brazil, for example, and a lot of, they're two of many examples, but if they can do that and really become one of the de facto places for digitized currency, that not only makes them relevant in terms of growth and digital payment volume for a long time and kind of insulates them from a transition that's a matter of when, not if, but also when these CBDCs or digitized fiat from the Federal Reserve or the ECB, when they hit PayPal's platform, or theoretically when they hit PayPal's platform, it's not, or that will be transacted similarly to debit or similarly to a PayPal balance. So there won't be interchange fees with credit card companies, and there won't be as high of assessment fees with other parties. And so not only is it a growth tailwind, but it's also CBDCs, if that becomes a larger portion of their payment volume, that would be a large transaction margin tailwind for them as well, make them much more profitable versus using predominantly credit and debit sources. I mean, we saw it during the pandemic. Their transaction margins shot up like 600 or 700 basis points because all of that stimulus that funneled into their system was all debit, or it was all PayPal balance, and the high third party card fee that they were paying became a much smaller part of their book, and that can actually become a permanent trend if it can kind of massage its way into being a prominent part of this transition, which they're trying very hard to do.
Fantastic. Now, it's quite clear PayPal is the most accepted digital wallet. Its overall merchant checkout placement is 8 times the next closest digital app, which is Apple Pay. There's some really good graphics that you had in the publication. You might pop them up on screen for the listeners. When the pandemic reshuffled the competitive landscape, PayPal showed its effectiveness by taking another incremental 2% checkout share from the competition, as leadership frequently reiterates. How is it that PayPal can maintain this lead, particularly against players like Apple Pay, Amazon Pay, and Google Pay?
Yeah. So I should preface all of this with saying in the United States and in North America, I view Apple as the most dangerous threat and competitor to PayPal. And then everywhere where Android or Google dominates, or Samsung dominates, even Samsung Pay, that's the most prominent threat and competitive threat to PayPal. So I think it's safe to say that Apple and Google will take market share and will find some success within their payment products. I mean, if the two of the best companies in the world, two of the deepest pocketed companies in the world, them not finding success would be amazing, and I'd love that. But I don't think that's super realistic. But the anecdote that really makes me encouraged. Well, first of all, Venmo has built this 85 million person user base predominantly through iPhone, and Apple Pay is not. I mean, it's not a brand new endeavor. So Venmo's really been able to carve out this niche of iPhone users who are electing to go on Venmo, regardless of the fact that it's a third party external app. But really, the thing to keep in mind in terms of like PayPal's competitive durability is when Apple and Google are taking share with their digital wallets, it's coming from the same share that well, I mean, it is coming from other share, but it's not coming from PayPal. So we've seen their checkout share continue to rise, and we've seen smaller players like Visa and Amex's checkout product, even Google in the United States, and all of these fast and bold companies kind of fall by the wayside, and this market share kind of consolidate to the stronger players. And I view that as happening, and not only that happening, but the interesting part of all of this, and sort of the counterintuitive part of all of this, is that um, when one digital wallet is used, so when Apple Pay or when Google Pay is used, that makes usage of Venmo or PayPal more likely. And that took me a little while to understand, but the way it was explained to me was that transition around the 1990s, where debit really became a popular form of payment, and people thought, well, that's the end of credit cards. Like that's all that's going to happen. And cards went from about one credit card per household on average to 5. And it didn't mean diminishing usage of the other cards. It meant diminishing usage of cash and checks and all of these other paper means of transacting that are continuing to have a lot of market share, majority market share. So a long runway to take that market share, but that's really where Apple is borrowing share from the smaller players, and these kind of older forms of transacting. And I think it's all. I mean, PayPal has a tap to pay feature on iPhone. They're partners. They work together in some capacity, and I think they're definitely more so competitors than partners. And I definitely think if you want to use the term frenemy, enemy is a more prominent part of that than friend. But they do work together in some capacity, which is somewhat encouraging. But again, I mean, I think Apple's they're going to succeed. It's an incredible company. It's an amazing company. PayPal just has to figure out a way to ensure that doesn't come at the expense of its own brand and its own company. And the way it does that is by having 36, is it 30, I think at least 35, we'll say that, million merchant accounts on this platform and 390 million consumer accounts to really force the hand of the Apples of the world and of these other competitors to continue to play nice and be these integration partners, because PayPal is supporting their own operations and their own volume. And the only way it can continue to do that is if it builds amazing products and continues to grow consumers and merchant accounts. So they have right now at this point in time, they've carved out a large enough, by far a large enough need to coexist in this space. But it's up to them. I mean, we always hear past success doesn't guarantee future results, and there are so many companies vying for their market share. There are so many companies coming for them. But it's just, I mean, they have to continue sprinting and continue innovating every single day, every single week, every single month, year. Because I mean, as soon as they get complacent, that consumer share and that market share goes away, and then Apple doesn't need PayPal. I don't need to partner with you. I don't need your volume because it's not as significant anymore. So it's a very fragile and precarious relationship in terms of PayPal, and then Apple, Google, and Samsung, whatever country you want to talk about. It's where they dominate in terms of market share. It's a similar argument. So those are really the three that keep me up at night for PayPal, where they need to overcome very real and foreseeable challenges from all three of these companies to continue succeeding. And the other one that I should mention that I'm sure your listeners will, why didn't you mention Block or Square? And so I'll mention them really quickly. They interestingly don't have a large demographic overlap in terms of their consumer businesses. Venmo really caters to a very affluent crowd, and very yeah, I'll stick with affluent because I don't want to yeah, so I'll stick with affluent. But and Cash App caters to more subprime borrowers and lower FICO score individuals and newer people in the financial system. So there's not a ton of user overlap between the two. They are competitors. There is some overlap for sure, but they coexist more than a lot of people kind of assume. And then in terms of kind of their point of sale businesses and Block versus PayPal's checkout business, PayPal really their bread and butter, and Square's trying to kind of take some of this bread and butter is e-commerce businesses and omni-channel businesses. Well, Square and Cash App, they're really in those coffee shops, in those restaurants, and all. And in these brick and mortar restaurants where that's or in these brick and mortar operations where that's the vast majority of their operations lie. And now PayPal is trying to encroach on that space, and Block is now trying to encroach on their space. And I'm sure they'll continue to butt heads more and more over time as they get larger and want to continue showing scalable growth. But to me, it's Apple, Google, and Samsung that are the threats right now to both PayPal and Square. And I view PayPal and Square as not super cannibalistic to each other.
Yep. So you mentioned that the pandemic was very good for PayPal. I imagine the stimulus checks in the US played a massive part in that. Can you just talk briefly about how you view PayPal navigating that post-COVID period? And maybe just comment on the COVID period itself and how PayPal navigated that, and whether that was a really great thing or whether it was okay, and what businesses may have failed or succeeded during that time.
I think a lot of companies during the pandemic just started extrapolating these trends and these growth patterns that they were seeing to be kind of a new normal, and okay, this is just going to happen forever. And PayPal was very much so caught up in that bucket. There was this massive sugar high where e-commerce exploded and cash displacement exploded. And PayPal just kind of assumed that, okay, this is it. Like, this is our new normal rate of growth. And they didn't consider it a pull forward like it turned out to be. They considered it just an acceleration of these secular trends that they were enjoying that wouldn't slow down, but would just continue on these trends. So they offered some really rosy long-term guidance at their 2021 Investor Day. They've since walked pretty much all of it back. No, they have walked all of it back at this point. And not only that, after the first time they walked it back, they overpromised and underdelivered again for another quarter and got severely punished for it. So they've changed the way, and I hope they're not just saying this to me, because I don't know how many more disappointing quarters I can take from them at this point. But they've said that they have changed the way in terms of how they think about guidance, and this is a cliche at this point. But what they're saying is, we were assuming that macro would improve and that these secular trends would recover and normalize, and now we're just our guidance is worst case scenario of every single data point and variable and outcome that we can possibly think of. So at this point in time, it sort of seems like the risk is actually to the upside in terms of if anything goes slightly better than they think it's going to go, if anything is not worst case scenario, then they should theoretically do better than their guidance is indicating. So it's been a very tumultuous 2 years for them, and I don't think they handled it well at all. But again, I've owned it for about 9 months, and that is really why selfishly I've been able to own this company. I mean, when it was at $400 a share, and you had this 10 to 15% compounder trading at 80 or 90 times earnings. There wasn't a lot. I mean, there wasn't a lot to do with it other than just wait it and hope something gets a little more appealing from a valuation standpoint. And that misstep is really what's opened the door and created that opportunity. And we'll see. I'm optimistic that things have gotten as bad as they're going to get for them. And hopefully the activist investor Elliott will steer them in the right direction and make sure that things have gotten as bad as they've gotten for them. But we'll see. I mean, again, that exogenous, weird, unique eBay headwind is gone. So it's up to them to perform at least in line with their competitors, which they've been saying they've been doing in terms of taking market share. So now prove it in terms of good financial results. And this last quarter sort of did that. It was a decent quarter. It was a good quarter, but they're still in the penalty box just based on 3 quarters of vastly disappointing.